Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video. In this series, I go through all your comments, your questions. I try to answer and comment upon them to the best of my ability. And that's the key word there, to the best of my ability. Sometimes I don't know, but one of the things I do like about your comments and your questions is I get ideas. Now, the whole reason I started this channel was to improve my media skills, particularly in front of a camera, because at work I used to have to get in front of the camera. So I thought this would be a good way to improve those skills. But one of the benefits for me doing this channel is I do get quite a few ideas from you, the viewer. So don't be shy in giving me a question or a comment, writing a comment, because I do appreciate every one of those. Well, except a few. Anyway, so let's get stuck into it because I want to get through as many as possible in today's video. And we'll start with Gazmo, who says, CHN, which is Chalice Mining, very interesting without the second E, but that's okay. Spelling mistakes are allowed. I don't mind them. I know what you're saying. So Chalice Mining, I've already got it up here, and I had a quick look before I started recording this video, and I have to agree, Chalice Mining is looking really interesting right now. Now, I don't know much about this company apart from there was a point in time in 2021, where this was a market darling. In fact, if you had a position in this company for a long period of time back then, you probably did fairly well. I think this could have been a 100 bagger. In fact, let's verify that. So this is the daily chart. Let's go all the way back to 2020 and 2021. And yeah, there was, in fact, what I should do, because this could be a good study of a breakout. What was the catalyst behind this breakout? What led to the share price of this company increasing from 10 to 20 cents all the way up to $10? And it seems like it started back on the 23rd of March, 2020, at the bottom of the COVID-19 panic. And that was almost the bottom, if I remember correctly. So something happened on that day. Share price rose 137% on that day. And there was another good day not long after. On the 15th of April, share price rallied 83%. But even then, you could have bought some shares on that particular day, 15th of April, at $1 and still done really well, because the share price went all the way up to $10.50. And it went from $1 to $10.50 in more than a year. So it reached the high in November 2021. So we are talking about an 18-month run where the share price increased. Well, it was a 10-bagger over an 18-month period. Now, when would I have gotten out? And I probably would have, if I had some shares in this company, I probably would have gotten out in April. So about 5 months after the share price reached a high. So we're talking about share price at $7. So there was a bit of a difference between the share price high and when I would have got out if I was just trading this. And that would have been a good trade because the share price, it did get back up to $7 back in April 2023, but share price moved into a downtrend in July last year. And I think right now, if we have a look at the daily chart for Chalice Mining, it has found a bottom. The bottom might have been back in February this year at about 88 cents, 86 cents. And it's starting to look a little bit more interesting. And definitely if the share price gets above $1.80, we are talking about a long-term high and the share price moving into an uptrend. The one thing I'd like to see is a little bit more volume coming through. Now, I don't know anything about this company. I don't even know where they are in the mining cycle. So there is that Vysarn curve. Let's have a look at images. So where are they in the Vysarn curve or the life cycle of a mineral discovery? Now, just based off the chart, maybe they're just past the orphan period and they're moving into the institutional and strategic investment period. So feasibility moving into development. But I don't know anything about this company. So for those who know a little bit more about Chalice Mining, I'd love to hear your thoughts. But for me, it's just the chart. The chart is starting to look a little bit interesting. So thank you, Gazmo. Even 1 month ago, it was looking interesting. And now it's looking way more interesting, to be honest. Thank you, Gazmo. Scott, talking about a point I made in regards to dual listing, jumping around, very interesting. Also, I was having a look at RCB today. Bond ETFs don't excite me. Yeah, to be honest with you, they don't excite me all that much. I only carry 5% in bonds, more than I carry. Now, we always hear that you should be diversified across asset classes. So bonds, stocks, paintings, coins, stamps, property, that sort of thing. I actually don't absolutely agree with that. I think you can be diversified just by having your wealth into shares, but that's just me. That's just me. I'm comfortable doing that. Anyway, but he might double up with RCB if there is a pullback. And I reckon JPAL should have cut at the last meeting. So 0.25, there's no meeting in October. He might be forced to go with 0.5 and therefore spook the market. I wonder if the Fed has gone from soft landing probable to shit hitting the fan probable. Oh, I shouldn't say that, should I? Either or a few more bonds might be interesting at ballast moving forward. And any thoughts of growing a guppy-esque moustache could be perfect for Movember. So I have no real thoughts about the first bit, but I have not even thought about growing a moustache. Definitely not a guppy-esque moustache, for those who don't know. Daryl Guppy did write a book. In fact, it was one of the first technical analysis books I read, and he has an absolutely stellar moustache. Oh, there it is. Images. Yeah. Whoops. No, that's actually decreased it. I don't know if I could actually grow that. I have tried to grow like a beard or a moustache before, and it just gets too itchy. I just don't like the itchiness. So maybe I can try again, because that was 20 years ago, and I was a child back then and probably stupid and very impatient. Okay, anyway, so thank you, Scott. No thoughts about doing a moustache just yet, but who knows? Oh, Liam Jones thought about Star, but it was still in suspension back then. Black top images. Have a look at Wrkr. A bit low value for me, but I feel like it's going to run. Now, this was the 20th of September. And yes, Wrkr has gone spectacular since then. Maybe it even started just before then. And the main thing I'm looking for here is, so it started to go up, about the start of September. And when that comment was put down written by Blacktop Images, it was around the middle here, and share price has kept on going up. We have seen a little bit of pullback the last few days, but that's okay. We've also seen the volume also decrease. That's actually a good sign. You can see the really good increase in volume. The volume hit a peak when the share price actually got up to 7 cents, and then the volume has pulled back. And the share price has only slipped back a little bit from 7 cents to 6.4 cents. That is telling me a lot of things. That is telling me that the holders in this company aren't that interested in selling. No volume, they're not interested. Share price is going to run. They want to stick firm with their holding in this company. That's a good sign moving forward. And all we need is for a little bit of enthusiasm from the buyers, and this share price of this company will keep on going up. Now, Wrkr, I'm pretty sure, do release appendix 4Cs, and there is potential that the market might be getting a little bit excited about this particular 4C. So I have to log in first, by the way. I was going to put 4C as a ticker code. Now, I'm pretty sure I've done at least one video on this company. Wrkr, there we go. Wrkr December quarter, financial year 23, and then I did a combined one with Hydrix. So I've done a couple of videos on Wrkr in the past, and I can't remember the last appendix 4C, whether it interests me or not. So let's go back to these type of companies. I tend to focus on the appendix 4Cs, not their full year results or the half year results, just because we get the appendix 4Cs every quarter. So they released this on the 17th of July. So if they're released at the same time this particular quarter, we should see it any day. Well, not today because it's Saturday, not tomorrow because it's Sunday, but maybe next week we will see Wrkr's appendix 4C. Now let's go back. So they were operating cash flow positive, and they were not, they were free cash flow positive. So maybe the market is expecting an even better quarter for Wrkr, and that's why the share price has gone on a bit of a run. So the chart looks good, lovely volume, increase in volume is exactly what I look for. This is a sort of trade I would make, but I haven't made it because there's a lot of opportunities in the market. I see every day, I see at least 5 opportunities, and I don't take all 5 opportunities. In fact, sometimes I don't take any. And that's a great thing about technical analysis. There's so many opportunities out there, and they're just popping up everywhere. You don't have to put as much work in when it comes to technical analysis, if you know what you're doing, compared to fundamental analysis. That's what I'm finding as well. In fact, it's Probably more fun, way more fun as well. That's just me. Anyway, so thank you, Blacktop Images. What's the value of the company now? It's a markup of 111.8 million. That's a little bit higher than I thought. Trey, OD, hope he has not OD'd, 4158. Thoughts on AMA and SS1? I definitely have thoughts on AMA, and I don't have any thoughts on SS1, which is a silver company that recently listed. I'll start with SS1. Sun Silver, if I remember correctly, recently listed. There he goes, listed back in May. The chart looks pretty good. Now, this, again, is a story stock. It's, I would assume, a silver exploring company. I have not had a close look at this company. Now, typically, I don't have a close look at any IPOs or any companies that have IPO'd recently until they release any sort of financial results or they release a trading update. If a company releases a trading update or a recent listing releases a trading update before they release the financial results, it's actually one of my most anticipated announcements from a company because I've done really well trading those stocks. First time I did that, I think one of the first times I did that was with Dust Group in late 2020. The share price went on a great run. And I've done that recently as well. Tasme was one I've done it recently. IPG Group, I did that just after they listed. They released a positive trading update. Bought some shares at about $1.90 and the share price kept on running. In fact, let's have a look at all three of those companies since I'm on this theme. So Dust Group. By the way, I've taken a position in Dust Group. I think the trend has shifted. And so if we go back to late 2020, this company listed in November and they released a really positive trading update on the 8th, not the 29th of December. I thought it was the 8th of December for some reason. 29th of December, share price on that day rose 12.8%. Probably a lot of experts would say, well, you've missed the boat. You're too late. It's already up. It's already been priced in. And look at that chart. Share price went from $2 all the way up to $4. I didn't quite double money. I got out before I doubled. I'm not sure why I got out, but you learn. And anyway, even if I maintained a position, I probably would have got out sometime in late 2021. And this is another occasion when the company released a positive update in December, and the share price went on a 6-month rally. And the share price high was in June or July, so 6 or 7 months. And my own research has shown that when a company releases a positive trading update, particularly a profit upgrade, you will or can see benefits in the share price for 6 to 9 months. That's the ideal period. And we've seen that with Dust Group. Doesn't always happen, and sometimes share price can rally even further, particularly if the company keeps releasing positive trading updates. Now, Dust didn't do that, but looks like the chart is turning around. Okay, I was going to actually show you two more. Tasme, this company didn't release a trading update, but they did release their financial results, and I have taken position in them. And also the chart looks pretty good. And the other one was IPD Group. Did I say IPG Group? Yeah, I always get confused. T code is IPG, company is IPD. Now, the chart right now, it's not in downtrend, it's not uptrend. I'm not taking profits just yet. It could be in a consolidation phase. This company released a really positive trading update back just after they listed. And even before they listed, the share price was in a nice uptrend, very similar to Dusk. So they released a positive trading update on the 7th of February. So that would have been results. And the share price went up 15% on that day. I bought some shares at $1.44. Not sold a single cent yet. Now the share price is $4.86. So the share price has more than tripled since then. Anyway, so the whole reason I started talking about these companies is because of Sun Silver. Now, the difference between those three companies and Sun Silver is a story stock. They have no financials. They aren't selling anything, I think. I could be wrong. Maybe they are in production. A simple look at TradingView says no. Well, they've got nothing here. Anyhow, but the chart looks good. This could be just a trade on the chart alone. Now, the other company is AMA Group, and I am trading this. Now, if I was just a value investor or maybe a value investor who likes high-quality companies, there's not many of those opportunities around anymore, I would not even be thinking about buying shares in this company. This is definitely not a high quality company, really low margins, but as a trade, this is looking interesting. Share price had been a pretty big downtrend, has been a downtrend for a long, long time. So share price reached a high of about over $1 back in 2019, has been falling ever since. A nice little rally after COVID-19, but even that rally lasted maybe 9 months and has been falling ever since. Share price has been falling from 50 cents down below 10 cents. But a couple of positive not trading updates, but the most recent Pennies 4C was positive. The company doesn't have to do any more Pennies 4Cs. They have been told by the ASX they're not required to do that anymore. That's a sign the company is moving in the right direction. And the July Pennies 4C was probably the inflection point for me personally when it comes to this company. So then all I needed was some positive signs in the chart, and we have seen that. In fact, the share price just rose, which is good. So let's go back to their Pennies 4C, if I can find it somewhere here. So they released it on the 18th of July. So I had a look at this and I went, oh, this is not that bad. So let's have a look. Now, I could be wrong, but I'm just relying on my memory. And sometimes our memories can do tricks on us. But I'm pretty sure I came away from this going, well, this is not that bad. Okay, so the company receipts of customers, 262 million. So they're into smash repairs. So fairly low margin, that business. But receipts, 262 million. $1 million receipts for the year. But the most important thing was operating cash flow. 27.1 million in the quarter, $39 million for the year. And I just saw that quarter cash flow, operating cash flow, and went, oh, that's interesting compared to the rest of the year. Now, they were also free cash flow positive. So you minus the capital expenditure. The other thing you have to take into account, in my opinion, is leases. And here we are, leases of 7.7 million. So even if you include that with capital expenditure, the company actually generated about $17 million of cash flow for the quarter. And the cash on hand actually increased by about 16 million. So this particular Pennies 4C was the inflection point for me when it comes to, or came to, this particular company. And that was released back here. Share price was about 4.5 cents then. But then I got a little bit of a bit of a signal as the share price started to go up after that at Pennies 4C, and they released their financial results in August. And I just wanted to see the share price get above 6 cents. And I think it was 5.8 cents. Share price got above 5.8 cents on the 4th of September, and I took a position at 6 cents. Now, my sell point was around about 5.5 cents. So I thought if the share price falls below 5.5 cents or something like that, that would be a sell. Actually, it might have been 5.8. And even though the share price did fall below 5.8, I just decided to remain a little bit patient because there wasn't a lot of strength in that selling. And yesterday, on the, what date was that? The 18th of October, the share price got to 6.5 cents. And that is the first time the share price has been 6.5 cents since January of this year. So we are talking about a 9-month high. And this chart is starting to look even better than when I took a position. So I do like this chart at this point in time with AMA Group. And the other thing I like about this, I think it has potential to be sort of a slow grinding chart where just share price just gradually goes higher. And I like those charts. I prefer those charts to say what we saw, maybe not Sun Silver, but what we saw with Drone Shield, or what we see with a lot of the mining exploring companies who release a really good drilling result. Share price goes bonkers, and then the share price always collapses. You won't see that with this because more than likely, day traders don't care about AMA Group. They care about those really volatile companies whose share price can increase 100% in one day. AMA Group's not going to do that. Anyway, thank you, Trey O.D. Wrkr. When a stock gets included in the ASX 200, prices usually increase as when they remove, they fall. In theory, that sounds really accurate. And in fact, I absolutely believe that. Would have been 8 years ago. And I bought a few companies because they were put into the ASX 200. And one of those was, now this is a really small sample size. One of those companies did really well. One of those companies did not. In fact, one of those companies was a company, funny enough, with a ticker code IPD, ImpediMed. Yes, ImpediMed, who has a market cap now, it's probably 100 million, 131 million, had a really high market cap not that long ago. When I say not that long ago, I'm talking about 8 years ago, maybe. Yeah, 2016. Share price of this company reached a high of $1.70, and they were put into the ASX 200. Maybe it was a 300. I forget, back then. The reason I took a position in both these companies is because they made it into the ASX 200 or 300. I forget exactly what. Could have been 300. And at that time, my super was with Australian Super. And Australian Super would only allow their super people, because it was a member direct, would only allow their member direct super people to only invest in ASX 300. So when a company was put into ASX 300, you could buy those companies. So it was ImpediMed, and I'm pretty sure it was Nanosonics. So I took a position in both companies. I didn't hold ImpediMed long because the share price started to fall not long after. So it doesn't always work like that. But the reasoning why the share price should increase once it gets put into the ASX 200 makes sense, because then a lot of ETFs, or maybe even a lot of fund managers, can buy that company, but it doesn't always work. But the reasoning is really solid, and I've actually done that before. So there you go. What do you think, Mr. Choksanakura? What do you think about Tyro payments? This is relevant because Tyro payments looks horrible right now. Now, funny enough, they released their results in August, and this was a potential breakout. So let's go back to the daily chart. This was a potential breakout, just a potential at that point in time. It didn't happen. The reason I say that, they released their results on the 26th of August. Share price on that day popped up 12.24%. The one-day candlestick looked pretty good, but the share price closed right on the downtrend line. This downtrend line has been in place since late 2022, and it's actually a pretty solid downtrend line. The reason I say solid is because it's more, I wouldn't say powerful. Solid is a good. So if the share price touches it once, it's not that solid. It's only once. So there's less sample size. Maybe that's the way to put it. There's less of a sample size. But when the share price keeps touching it and then keeps on falling, which Tyro Payments has done over the last year and a half, or maybe even 2 years, that means there's more validity. That's probably the good word. Validity to the downtrend line. Yes, I like that word. So this downtrend, it's a lot more valid than if the share price had only touched it once. And here it's touched it numerous times. So there's a lot of validity to this downtrend line. So when the share price actually closed right on it, it's just perfectly finished, closed right on it. I went, okay, it has the potential to break out. If the share price closed at the high of the day, it was even better sign of it breaking out. But then the next day, the share price fell. Then the next day, share price fell. There's a little bit of a rally a few days later, but it got nowhere close to the downtrend line. And at that point in time, I just became not as interested in Tyro payments. So on or late August, I was interested in taking a trade position in this company, but no. After that, we then saw a bit of weakness, and the market is telling us, no, we're not that interested in this company. And then just the other day, we had that, whatever it was, debit cards won't be surcharged or something ridiculous like that. Maybe not ridiculous. And Tyro payments, Smart Pay were both negatively affected by that. Share price has kept on falling, and the share price right now at 78 cents is at a support zone. So right now, it does actually look interesting because of where the share price is. But the very fact the share price has dropped a fair bit from when they release their results is not a good thing. And I probably the way to trade this, you could maybe envisage a nice little bounce here. But the way that I would trade this is just wait until the downtrend is broken, because we just don't know how long the share price of this company has to fall. We just don't know. Anyway, that's just me trading it. I don't or would not consider Tyro Payments to be a high quality company. So that's very important. Do you consider this company high quality? Would you consider having this company in your portfolio for many years if that's your investing strategy? So there's a lot of questions. Whenever I get a question like this, what do you think about Tyro Payments? It all comes back to your investing strategy. And I'm hoping your investing strategy is different than mine. So I do prefer right now, and I'm leaning this way more and more, I do prefer trading or using technical analysis. So when I first started investing, it was all about value. Finding good value, cheap companies. And then it sort of went from value to value and high quality. But those sort of situations are really rare. High quality company that is good value, extremely rare. You don't usually see that. The only time you're really going to see a lot of those companies is when you see a significant downtrend, downturn in the market. And we really haven't seen that since I started investing back in 2009, 2010. Anyway, so it all comes back to your investing principles, your investing strategy. What do you think about Tyro Payments? Is this a high quality company? So maybe you don't mind having shares in this company for 5 years, and maybe 78 cents is really good value for this company. I just like or prefer just to look at the chart, and for me, not yet for Tyro Payments. Okay. Oh, this is the question about. So this is Marty Scott. Love with a heart. You get 2 thumbs up for that, Marty Scott. Just spent a month in Europe and didn't miss a show. Okay. Yeah, whatever floats your boat. RE, GDG, I have DPR, which is Dividend Reinvestment Plan or something like that. I thought it was, is it DPR or DRP? Dividend. DRP, yeah. Okay, there you go. I thought it was DPR, then I was thinking maybe it's something else. So I'm assuming you mean DRP, not DPR. I have noticed the last announcement said there will be $2.82. Does that mean if I have 1,000 shares, I receive 2,820 back into my portfolio? Surely not. I'm still learning thanks to you. So sorry if this is a dumb question or dumb question. So again, there's no dumb questions. Now, I have never, ever used a DRP. That's just me. Yeah, that's just me. I prefer to take my cash and invest it into other ideas. Forest Hill has actually given a reply. No, that's the price they've assigned per share for purchasing shares. If you decide to reinvest your dividend, so if your total dividend from your 1,000 shares was 28.20, you would get 10 more shares. So that's the pretty good answer, I think, from Forest Hill. I'm assuming that is right. Yes. So that's a share price you buy shares at. So $2.82. So that's not how much money you get back, but that's a share price. For instance, GDG, and usually there is a discount. So they want to incentivize shareholders to take the DRP. So they usually give it as a discount. In fact, you can probably, all you have to do is GDG DRP, and don't want images. There we go. Or you have to sign a form, huh? Allocation price. There we go. Here we go. So we priced at 282. So that was probably a nice little discount. So that's the share price, or the price you're paying for the extra shares you're getting. Probably the best way to say it. The price you're paying for your extra shares, and usually it is at a discount. And I'm pretty sure that's what Forest Hill says. Yes. So thank you for that question. Again, no dumb questions. Give me all your questions as possible, because we all start at the same point in life where the day we're born, we're completely stupid. Well, in a sense, we don't know anything. Not stupid, we just don't know anything. And as time moves on, we learn more and more. And being curious is really important. So no question is dumb when you're curious, because after you ask the question, now you know. So hopefully, Marty Scott, now you know. Nice says, thanks for covering my comment. What I wanted to ask about taking a late position was that how you would buy sometime after stock has broken out. For example, would you buy Superloop or Zip now? Any specific trigger? Okay. So a lot of times I am late to the party. So we'll look at Superloop, and Zip. Now I'll show you when I might add to my positions in both of these companies. So let's have a look at Superloop is SLC. You're asking about Superloop? Yeah. Okay. So I bought at 79 cents, and there's nothing wrong with this chart. So what I did, this solid blue line, so this acts as 2 things. This would be my add to my position line, and this will also be my take my profits line. So, or sell my position, sort of like my stop loss line. So $1.63. Now, after it breaks above this, if I see the share price fall back to here, I would think, okay, now I could add to my position, even though share price is well above the breakout price. But if the share price then falls below and falls below, I'll just take profits and sell. And you can see it actually hit. I actually would have put this line in not that long ago. I probably increased it. So I would have had it probably down here somewhere. I would have had it probably there, and then I've just increased it and to there. So what I'm now looking for, if the share price pulls back to here, that would actually be fairly not a good move, particularly after the nice little move it's had. It's now at $2. So if the share price falls from $2 to $1.63, that would be a negative move. So there is potential to actually raise this line in the near future, say to here. And then if the share price falls back to here, and then I might take or add to my position. If the share price falls below that, then I'll just sell. So that's what I do. I just raise my stop losses, and the stop losses also act as a trigger to probably add to my position. Not always. The other way I might add to my position in these sort of situations is if they release another positive update. So if you see another breakout. So I do that quite often. A perfect example of that is AGL. So AGL. Now this was a preemptive position. I took a position in AGL back in April on the thought it was going to break out. If I had to do this again, I think I was a little bit too early. But not long after I took a position, the company did release a positive announcement in May, and I added to my position at $10 because that was a nice little breakout. You had a lot of time to add, because the share price went sideways for 3 months after that. And the share price keeps on rising, and there's my stop loss at $11. So hopefully I've answered your question. There is no time limit, in my opinion. There is no time limit. There's no late. I've been really late to the party for some trades, really late, and the share price keeps on rising. But I always have this sellout price, and I try to keep to that stop loss price. And Zip, the other one was Zip. So this is the one where I have traded quite a bit over the past year and, well, actually about 2 years. And I probably should have just had a trading position and not sold. But we have seen the share price being quite volatile. And then I decided to take a position in Zip at this little point here. So to be honest with you, the breakout for Zip was, I bought, I'm pretty sure, about 50 cents. I can't remember exactly when I first took a position in Zip. I think it might have been around 50 cents, and then I took profits along the way. I was completely out around between about March and July. I was completely out of Zip. Then I took a position back in when the share price broke above this purple box. That was a very important level. But even though it broke above it, I took a while to buy back in. We can actually see the share price dip back into the purple box for a brief period. I should have actually bought then, but I bought a few days later, because that was confirmation that that purple box was now a support zone. And where do I have my stop loss for Zip? $2. It's a round number. It makes sense. Round numbers tend to be very important levels for companies. And we've seen that with Zip. Share price got to $2 on the 1st of August, then pulled back, broke above $2 on the 16th of August. It tested it twice, subsequently over the next few weeks, and share price has gone higher. I might eventually lift that. I haven't decided that just yet. And to be honest with you, I could envisage myself lifting it to $2.50 because it looks like that's the next little support level. I'm going to do that right now. $2.50 is now my sell stop loss for Zip. If I see the share price pull back to $2.50, that would be a good move. But we've already seen that. Share price broke above $2.50 on the 19th of September. It pulled back close to $2.50 and has gone higher again. So you could even say I could even lift that higher to there. So that's all I'm looking for is share price still in an uptrend. Share price has all the telltale signs of an uptrend for Zip. And I'm waiting for any sort of pullback. But the main reason I'd add to my position in Zip is another positive announcement from the company or another breakout, another day with the share price that zooms higher. And then maybe a little bit of pullback, and then I'll buy on that. So hopefully I've answered your question now, nice. Hopefully. But if you have any more questions, maybe my answer wasn't to your satisfaction, just leave that in the comments section of this particular video. Chris and Caroline really likes my daily rundown videos. Thank you. Okay. Just James Dean. So this is not James Dean, died in 1955. Maybe they're related. Heaps of cheap homes in remote, regional, and plenty of jobs. Yeah, I don't care about jobs. Yeah. I would have thought in mining or high demand areas, it would not be cheap. Most larger regional cities don't seem to have housing. That much is cheaper only in small, tiny or small towns. Top half of the country is pretty cheap relative to income. Okay, so it's just a discussion on housing. I haven't looked at housing in like Birdsville, but I'm presuming a lot of those regional areas, housing wouldn't be that expensive. However, along the coast, Sunshine Coast and Gold Coast are more expensive than Brisbane. Now, I did speak to a real estate agent, and they said typically in those situations, those are the places where the price falls the most when we do see a downturn. And we're already starting to see that in Florida, apparently. Florida, yes, Florida. Although that could be because of natural disasters, I don't know. James Dean, just James Dean, says Ozempic killing off demand for plus-size clothes. Bad news for City Chic. I have never thought of that. But it does sort of second-order thinking, which is pretty important, second-order thinking. Ozempic killing off demand for plus-size clothes. I would not be surprised if, say, in 10 years, there's no such thing as obesity. It would not surprise me at all. Obesity is costing the healthcare system heaps and heaps of money. And, yeah, and I would think governments around the world, maybe not health companies, or maybe some, would want to not solve it, but want to decrease the amount of obesity caused diseases or diseases caused by obesity, heart disease, that sort of thing. So stuff like Ozempic wouldn't be surprising if these sort of drugs become not rampant, but become very popular, not only among people, but governments, maybe not forcing it on people, but that. Also, anti-aging is going to be a massive thing over the next decade. It's already a thing. People are willing to do anything to stop the aging process. And another thing why that's going to be very popular among governments is because of the aging population plus low fertility. So with the aging population and low fertility, we're not going to have enough workers for all the jobs. That's a problem moving forward. So historically, the problem has been not having enough jobs for all the people. Moving forward, it's not having enough people for all the jobs. And one way to solve that is to get people to work longer into their life. And the way to solve that is to slow down the aging process, or maybe even reverse the aging process. So a lot of money is being put into that. And we are seeing some success along those lines. In fact, I told one of my colleagues about that. He was like skeptical. Well, they can't solve balding. How are they going to solve all this? And I said, just do a bit of research. He came back a few weeks later and went, I've done the research, and it's impressive what they're doing right now. Anyway, rant over. Maybe that's not a rant. Another comment from Just James Dean. How much higher can Westpac go? I would say, how much higher can all the banks go? It's interesting. Even though the charts look pretty good, there is no way I would trade these right now. The main reason is valuation. I just don't see significant upside moving forward. So when I say significant upside, I want to see potential 20%, 30%, 40% capital return in the banks, and I just can't see it where they are right now. Now, the only thing I could say is maybe I'm kicking myself because we had breakouts in a lot of the banks back in late last year. So for Westpac, it was in late December when the share price was about $23. So that has been a nice return since then. So we're talking about 50% plus return since December. But with the banks, with no growth at all in these companies, to get a 50% capital return in such a short period, you would take that. That also means the forward returns for these companies are low. In fact, they're more than likely going to be negative even with dividends. So I have no interest in the banks, and it's intriguing why people are buying or willing to buy banks right now. I just find that so interesting, but particularly when the risk in buying the banks right now in terms of your forward returns is quite, well, the risk reward, it's not in your favor at this point in time. But obviously there's some people, institutions are not thinking that way. How much higher can they go? It's true. I would say we're in a bubble. The banks are in a bubble. Scott's talking about Fred Harrison. Oh, this is an interesting comment. Regarding property and the efficiency of taxes, if property price appreciation was on par with wage growth, then one's disposable income increases as one mortgage decreases. So one can then invest in awesome businesses, which boost productivity. Yay. When I started working back in 2008, I had a colleague who was near retirement, and he said he feels sorry for the current generations because back in his day, he bought a house, but the mortgage didn't change at all. So all these people complaining about, all these boomers saying, wow, we had really high interest rates, but he also had really high wage growth. And this guy, my colleague, said I don't think he said feared, but he felt a little bit sorry for the current generation and future generations because back in his day, he had really high wage growth. So the mortgage didn't change, but he had this really high wage growth. So eventually, even with high interest rates, the mortgage was easily covered by your higher wages. And then, as Scott says, then you could put all your excess cash into other investments. And that just hasn't happened. We haven't seen wage growth. But what we have seen is mortgages just go up and up and up. And the other interesting thing I heard today was in regards to debt. No, Japan. So I don't know a lot about Japan's history, but they had a massive property boom in the 1980s. And the way they had one of the reasons, or one of the ways they saw a property boom is leveraging lots and lots of debt. And the reason that economy collapsed in 1989 is because of too much debt. And they've completely switched it now from when they had way too much debt to probably having way too little debt. In fact, a lot of companies over there, according to this particular interview, a lot of companies over there have an enterprise value of negative because they just don't have any debt, have really low return on equity. But it does seem like things are starting to change over there. But yeah, debt can kill if you have too much. And we have just seen significant increase in debt in Australia over the past 20, 30 years because of low interest rates. And I do fear what's going to happen in the future if our debt levels keep on rising. I don't have any debt right now, and I'm fine. Rick Thellian had a really interesting comment, but I didn't quite understand it. And just like Ashad Nobi. Both of us have question marks. We don't have to comment about... actually, no, let's have a look at KMD again. I might have answered these before because KMD does look cheap, but the share price is still on downtrend. So I'm just waiting to see any signs of life in the chart, and we're not seeing that. There was a bit of life between July and September, but not anymore. Share price has pulled back. So we can move on to the next one. Just James Dean, CTD, bounce off the bottom, new uptrend. This is another interesting one. I think I've answered this one as well. The reason this is interesting is because share price of corporate travel management dropped 9% yesterday because of Flight Centre, and it's now at the support zone. So that's a support zone, or that, what do you call it? Why is it that keep going down? Bounce off the bottom. Can it bounce off the bottom again? 1133. This might be interesting for corporate travel management. It keeps going back to that. I'm not sure why it does that. Stop doing it. Let's see if it does it again. No. Fantastico. Answer the question. A handle is a whole number, part of a price quote. That is the portion of the quote to the left of the decimal point. For example, if the price quote for the stock is $56.25, the handle is 56, eliminating the value of cents in the quote. Thank you for that, Fantastico. That is something I've never heard of before until that day. Austal down 5% 3 weeks ago. Formally abandoned its pursuit of Austal, the only ASX-listed shipbuilder. I have a feeling Austal has gone bananas recently. Yes, it's gone bananas. Something happened. The chart looks pretty good, but that's all I have to say. The chart looks pretty good, but I don't think I have any interest in trading Austal right now. Jeremy Campbell, love your work, mate. Can you please look at TMG? Cheers. So let's have a look at TMG. Trigg Minerals. Have I answered this before? This is familiar, but it's okay. So this has all the hallmarks of a chart I like, apart from maybe one thing. No, actually, that's not true, because the one thing I'm thinking about has nothing to do with the chart. I prefer to see the share price rally on good financial information. Now, I'm not sure what has rallied or what has led to the rally of Trigg Minerals, the catalyst, but we all have all the other hallmarks. Share price in an uptrend. It's pretty easy to see it's in an uptrend. Share price has taken off. Share price at least a 6-month high. We have seen a little bit of a dip. Now, we have seen lower volume of that dip, but the other thing I like to see is volume. Look at that explosion of volume. And it's just one day. It's over the group of days. So definitely the market is way more interested in Trigg Minerals. The question is why? I don't know, because I don't follow this company at all. But that's a good thing about technical analysis. All you have to do is look at the chart. Pretty good. I don't mind this. A nice potential buy the dip situation with Trigg Minerals at 2.8 cents. That's all I'm going to say about Trigg Minerals. It looks pretty good. Okay. Don't think I have to answer that one. But say something soothing. Doesn't want to see another private equity firm napping on Star like Blackstone did with Crown Resorts in 2022. I think private equity firms are on a shopping spree with affinity equity partners acquiring Loomis from Helios. Yes, definitely true. Private equity firms are just buying up companies, and I won't say I have concern for equity markets or public equity markets, but private equity firms are gobbling up a lot of companies that should be on the public markets. So it is a concern moving forward. So thank you for that. Say something soothing. Oh, see the world. Can you also talk about Vysarn that has already been listed? I'm pretty sure I've talked about this, and I'm pretty sure I mentioned no. I think it's no longer going to be on the ASX. So I have a feeling I've talked about this. Yeah, I'm pretty sure I've talked about these. And that makes sense because I've already liked these. Give them a thumbs up. And that's my sign that I've actually talked about companies. Yeah, thumbs up for that one as well. So obviously what I forgot to do was put in a reply to those. So this is one I haven't given a thumbs up. So I haven't talked about it yet. So Dykes also bought more Star. I think more chance of them getting out of this hard spot than not. Same, it's oversold. Ben Hutton says he's also took an entry at 22.5 cents. And Dykes bought some at 25 and 20 cents. So you've done well. And I should also mention I have added to my position in Star because risk reward. There is a risk, but the reward, if things, this is the bottom, this is the worst it gets, there is potential. The share price could quadruple, 5-tuple, sextuple, septuple, higher than it is now. Just a chance. And the worst I could do is down 100%. The best, maybe 700%, 1,000%, maybe not 1,000%. Yeah, 1,000%. Why not? Nerdburger. Okay, I answered Nerdburger yesterday, so hopefully, yeah, I'm pretty sure it was Nerdburger who asked me the question. The only Australian company drilling in Mexico. I remember that now. Yes, Nerdburger. Yes. Stu Percy, been a good week for me. A lot of my shares bounce back. Okay, Stu Percy again. Did you see Vysarn Limited SP or share price jump after ASX aware announcement? Any thoughts on that? I don't understand why it would cause a jump up. I am a holder of Vysarn. So when was this? I can't remember this at all. What happened with Vysarn? What was this? This was a response to ASX aware letter on the 24th of September, 3:52 p.m. And let's have a look. So what is the ASX asking Vysarn here? Okay, so this was in regards to share price increasing a fair bit from 40.5 cents to 47.5 cents over a few trading days. And the ASX is like wondering why this is. And they're saying there was an acquisition of CMP and capital raising on the 13th of September. So where's the questions here? Oh, there's just so much. Here it is. Here's the questions. So they're saying, is this information about this capital raising and this acquisition information that a reasonable person would expect to have material effect on the share price or value of its securities? So that's the main crux of this particular announcement. And what does Vysarn answer with? And they answer with yes. In fact, they answer with one-word replies. Yes, 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 not applicable. Anyway, so let's go back to the chart so this was the 24th of September. Let's go to the chart of Vysarn. So that sort of announcement, I wouldn't expect much of a reaction from the market unless the market doesn't like something in there, or maybe likes it. But typically it's not like, and you won't see much of a reaction, to be honest with you, most of the time. And yeah, the share price really bounced the next day. It could be just noise. I don't know. It could be just noise because we have seen quite a few days where the share price of Vysarn just, rallies in one day. We saw that on the 10th of October. Share price rose 7.5% in one day. Now, the main thing about Vysarn, the chart looks pretty good. No concerns about the chart. I do have a sell stop loss at 37 cents, and I might raise that to probably 42 cents at this point. And the volume, the other thing, volume, look at the volume. Always look at the volume. Look at the volume. Nice increase in volume. That is telling. That tells us that there is institutions more than likely interested in this company. Maybe they're taking positions in Vysarn. And that's very important. That will lead to the share price rising if more and more institutions become interested in this company. They like the company. They want to take a position in the company. They think it has potential for the next 5-10 years. And they're trying to get in as cheap as possible, that sort of thing. So that's really interesting that the volume has really increased over the past year. It's a good sign. But other than that, I don't see any reason why the share price would jump that aware. I think it just maybe it's just noise. Sensei, thoughts on EMVision medical devices, $175 million market, $2 share price. I have no thoughts on EMV, the company itself. I don't think I've ever looked at EMV. I'm assuming they are a medical device company. The reason I say that, it's in the name. EMV. So this is going to be interesting. I've never had a look at this company. Do they do an Appendix 4C? Let's have a look. They do. So I'm just going to open up their Appendix 4C. Now, if I don't know about a company, the first thing I do is just have a look at the most recent financials. Now, with this sort of company, it's going to be the cash flow report in their Appendix 4C. Okay, so the first thing that is noticeable, and this is why I have not had a look at this company, they are a story. There's a story stock, no receipts, burning through cash, and that's, for me, I'm more risk averse than I have been. And I think that's probably true for most investors. As you do get older, more experienced, you become more risk averse, which makes sense. You're more likely want to protect your capital because it keeps on growing. So I'm at the point where my risk aversion has led me to that position or that point where I'm way more aversive to buying companies that are story stocks like EMVision. Now, just because that's my own investing philosophy doesn't mean you have to do that as well. For instance, if EMVision medical devices, they are successful, this company could be a $1 billion company in the next few years. I don't know. I don't even know what they do. What do they do? Let's have a look. So EMVision is an innovative Australian medical device company, developing, I don't care about that first line. I want to know what they do. They develop a novel approach to looking inside the human body. That's interesting. Product pipeline includes portable, non-invasive, affordable, and safe neuroimaging devices. Their vision is to help transform and improve the timely diagnosis and treatment of stroke and other time-sensitive medical emergencies at the point of care. Now, to be honest with you, that actually does sound interesting. I'm actually going to give them to that. That does sound interesting. And I can definitely see why some people might be enticed by that story. But again, they have to prove themselves to me and other participants in the market. Now, let's have a look at the chart. So at this point in time, the chart, if we go all the way back, actually, let's have a look at the weekly chart first. How long have they been on the ASX? I don't know why volume's doing that. It must have done something. I reckon I'm going to just refresh. It's not scaling back the volume. And there should be a... Let's go back to EMV. I'm hoping it's fixed. Let's have a look at the weekly chart. Oh, it's just so slow now, isn't it? Just take your time. No, it hasn't been fixed. No, visibility. This has happened to me in the past, and I can't remember what I did to fix it. Anyway, it doesn't matter. It doesn't matter for now. So the first thing about EMVision medical devices is the chart. Well, the company itself. What do you think about the company, their technology? Do you think they're going to be successful? For me, it's a little bit too risky. I just don't know. So it comes back to your conviction about their technology, I suppose. And when I'm at that point, I'm probably less likely to trade the company as well. And if I was likely to trade the company, or for me to trade this company, I need to say something with the chart. And at this point in time, just looking at the daily chart, I see nothing to get excited. If the share price is just going sideways over the past 5 or 6 months. So that's all I got to take away from EMVision Medical Devices. And to be honest with you, you probably way know more about this company than I do. And if you know way more, just leave us your thoughts. That'd be interesting. Leave us your thoughts on EMVision. And with a market cap of 175 million, the market does have some positive thoughts about the future of this company. eCargo has delisted. This is another great example of why eCargo should not have delisted. The negative sentiment towards China that they whinged about it is already starting to change. Yes, they whinged about that, and sort of the sentiment in China has started to change, or did start to change. Anyway, so no more reply needed. eCargo delisted for some stupid reasons, and anyway. Kneppy Invest's got to be my favorite category, favorite coverage of the ASX. Oh, thank you. Very kind words. Thank you, Sensei. Yes, I've already done that. Okay. Chart Fart, interesting name. I've been watching since 2021. I think I started this channel late 2020. Have always liked your investing and research style. Have no intention to assume, but as a neurodivergent individual, I think you're very smart and knowledgeable. On the topic of well, yeah, very smart. Right, so I am smart. I will have to admit, I am smart, but I think one of the problems is when you become smart, sometimes you realize there's a lot of things you don't know. And that's my biggest problem. There's so much things I don't know. I'm really curious. I want to learn as much as possible, but I am smart. But yeah, there's so many people out there who are way smarter than me, and the market as a whole is smarter than me, and knowledgeable. I think I'm just building on my knowledge from day to day, and I think that's very important. You just build on your knowledge day to day. Anyway, on the topic of ASX rundown videos, I personally like them since it gives me another perspective to consider. We all have different watch lists. For a standalone video, what do you think of doing a topic on what's happened since then? I really like the historical context and how company decisions affect sentiment price. That's actually interesting. I do like that because we can learn a lot by what has happened since a company has released an announcement. So this is what happened. This company released an announcement on this day. It could have been company changing. Did it change the company? And I have actually looked back in the past at some of the decisions I've made and went, and particularly some of the announcements that have led to those decisions I've made, and think, why? And because, yeah, a great example was, this is way back 10 years ago, was when this company made a deal with Procter & Gamble. And I thought, Procter & Gamble, oh, this company's going to go bananas. Nothing came of the deal. In fact, the company went bankrupt last year, I think. Changed the name and went bankrupt. So I think that's good. We can learn from history. We can learn a lot from what has happened, because the old saying, Mark Twain, I think, said it, history doesn't repeat, but it often does rhyme. We can learn a lot. Okay, Nerdburger, yes, we got your thoughts. We know you like Mithril. That's okay. Oh, Siteminder, Jackie Hilm. This should be my last question of the day. Yes, because I'm out of 1 hour. Anyway, Jackie Hilm, Thanks for the video. I was looking for Siteminder analysis. The company is debt-free. What's your thoughts again? What's my thoughts on... Should like that. Make sure I like everything. What's my thoughts on Siteminder? So I have traded this. So let's go have a look. This company is on the verge. Now, they do stuff for hotels, like software stuff for hotels, something like that. Again, I don't know a lot about the company, but they do software stuff for hotels. They were a part of Bailador Investments. Then, like Bailador Investments took a fairly big position in Siteminder. Maybe not big, but they did an investment in Siteminder. That's the reason I actually do know about Siteminder, because of Bailador. And then Siteminder listed at a pretty nice price, $1 billion, I believe, almost $2 billion. So they have, there's a lot of promise already priced in this company. But in saying that, let's go back to July. Have a look at the most recent pennies 4C. Again, I just like the pennies 4Cs. And if I remember correctly, they're on the verge of becoming profitable and cash flow positive. Oh, in fact, they're not only on the verge, they're well above that verge in this particular quarter. So $53 million of receipts and operating cash flow positive, $8.1 million. Now, in saying that, they did spend $6.7 million in intellectual property. I do consider that to be a real expense for the company. It's capitalized research and development because it's an ongoing expense. So they were free cash flow positive by about $1.4 million. So that's the way I deal with intellectual property. I say operating cash flow positive, $8.1 million, but free cash flow positive only by about $1.4 million. But they are cash flow positive. That's the most important thing. Not for the whole year, but definitely for the quarter. So I need to see that continuing over the next few quarters. But I think they're on the precipice of hitting that inflection point. But the market knows about it. The market has known about this company for a while. The other thing about the chart looks pretty good right now, if I remember correctly. Just take your time. Yeah, the chart looks pretty good. So we had the breakout back in August of last year when the share price was $360. Share price almost doubled since then. It looked a little bit weak between May and September, but then a nice run in the share price from September into October. And not only that, share price, not quite a all-time high, but it's getting there. So that's really all I know about Siteminder. They're in the precipice of becoming operating cash flow, free cash flow positive. If the valuation of this company was, say, $200 million, I'd be freaking all in. Maybe not all in, but I would be way more keen. But $2 billion in market cap, that's a fair bit. The other thing I should mention is, you said there's no debt. I would be surprised if they had a debt. Okay, so they do have $32 million in financing facility or unused financing facilities. So they have no debt. But they do have financing facilities. Yeah, anyway. So a pretty good quarter from Siteminder, and really intrigued to see how they do this quarter, because if they can replicate that sort of quarter, I can sort of understand why the share price has gone on a run. And maybe the market is just anticipating another good quarter from Siteminder. Okay, that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.